Welcome everyone. Thanks for joining us for Cross Currents, the series where we connect economics and policy and make it relevant to your portfolio. I'm Ben Fawcett, Vice President, Canaccord Genuity, and with me, as always, is Rod Phillips, Vice Chairman, Canaccord Genuity, and former Finance Minister of Ontario. Rod, great to be talking to you again.
Yeah, good to see you, Ben. It's been an interesting last little while.
It's been a busy summer and lots to get into today. So perhaps let's do a quick recap and then we can get on to what's happening now. The tariff negotiations continue. We didn't get the grand bargain that we were hoping for or the Carney was hoping for. You had digital service tax repeal. You had softwood lumber discussions. You had retaliatory tariffs removed. What were the sort of key takeaways from your perspective?
I think realistically, the importance in the context of everything that's happening in the world, literally a reordering of the global trade and security order, the ability of Canada to get the attention of the United States and specifically of Prime Minister Carney to get the attention of Donald Trump, it just wasn't there. So I know the Prime Minister had hoped in the summer to have a trade arrangement in place. I think he wouldn't have talked about that and his team wouldn't have talked about it if that wasn't what they were counting on. But the reality was that they got swept aside by events. I don't think most of them had much to do with Canada. I think we've all been following the news and there's a lot of other things happening in the world right now. So I think in that sense, any deal that could have been cut wouldn't have been one that would have been acceptable to the Canadian people and to the Prime Minister. You know, he's managing a very complex coalition now of premiers, which still remain largely intact and unusual in the recent Canadian history to have that kind of alignment, and even support from opposition parties on some of the major projects initiatives that he's put underway. But I think this fall is going to be when the rubber hits the road. That doesn't mean I think that we'll necessarily get a deal in that time frame, but I think a lot of the factors that are going to affect the eventual outcome, the legality of what President Trump is doing, the other major geopolitical issues and factors that are affecting it. We're clearly now starting to see some of the economic impacts of this dispute and other matters in the economy flowing through to Canada and putting pressure on governments, provincial and federal, that are now having to take steps to support businesses and individuals, and a budget from Prime Minister Carney, which I know we're going to talk about a little bit later. But all of these things will start to come together. And I think now people are going to really be in position to judge all levels of government's success in terms of managing, these issues, particularly the trade issue.
Yeah. I mean, perhaps you touched on the economic standpoint. Just to clarify, there you had unemployment data coming in Canada. We're at 7.1% now. So clearly, there's not a lot of job creation. GDP came in at a negative number. We'd be in recession technically if we have a second one, though that isn't the expectation. Could you just talk about perhaps some of the Carney's recent initiatives talking about, stimulus, potentially job training?
They've launched some of the major initiatives coming out of the campaign, commitments around a major projects office, which sounds very process-oriented, but having been around government, it's really for business people, the idea of a PMO or a project management office that will coordinate, and of course it being located in Calgary showed some political adeptness, discussions with the premiers about a list of projects of national interest and presaging some of those, including the potential expansion of the port in Churchill and in Montreal and other places. So I think over the next 30 days we'll start to see information about those coming out. That will start to then see how that balance goes between the various provinces, who obviously have their wish lists, some of which they'll get, some of which they won't. Issues with Canada's First Nations in terms of having to address some of the fundamental questions around the ability to advance major infrastructure projects, and across underlying that, supports for industries and businesses at both the provincial and the federal level. So we're already seeing support for the aluminum industry, the steel industry, and other businesses. But at the end of the day, the government can't afford to fund the economy, and that's why you've seen the announcements of support for retraining. So already changes in terms of the expectations around those programs, to see that there is an expectation that there's going to be major dislocation. I think right now people are thinking mostly in the industries that have been targeted by heavy tariffs for Trump. But we've seen, in a tangent, but not unrelated, the issues around the canola industry, which is actually China imposing costs on the business. So a lot of balls to juggle. And the Prime Minister, again, aligned with the provinces at this point, I think, is trying his best to lay out a sense of a plan. But the reality is that there's so many changing features to that. We talked about increases in defense spending, a bunch of other things. And all of these projects, I just say, are in the long term. I think there is alignment. And yes, there are questions around First Nations involvement, around provincial involvement, around the environment. But there does seem to be unique alignment around the need for these. But we have to realize that many of these are 2, 5, 10 years in the future in terms of their actual benefit. So if Canada could have another 2 pipelines to the West Coast today, that would change the economy today. If it's about pipelines to Tidewater, west or east, that's 5 to 10 years away. And so the only benefits economically are going to be injections of the construction stimulus, which is something. But the actual reorienting of an economy like this is quite a project.
Yeah. 2 sort of follow-ons from there. One is, do we get a pipeline, do you think? I think we get some announcements this week. Will they be a priority?
It looks as though there will be, there's been certainly talk about an eastward one, and that's where Churchill and LNG have been talked about, which avoids some of the complicated issues of Quebec and pipelines politically, but it also puts in front of us the fact that you have 4 to 5 months of ice-free transport, but it means we better be making those icebreakers. If the Churchill Manitoba project is going to come through, but that has a very unique set of alignments because it's First Nations owned and already meets some of the other criteria. To the west, that's a really interesting point. The Premier of Alberta says it would be crazy not to have one now that you're putting the projects office in Calgary. And certainly the leadership of the Major Projects Alliance are people who have experience in that. On the other hand, you've got British Columbia, who still are questioning that. But presumably there's a lot of work going on behind the scenes there. And I think the last one cost $34 billion. And was,
Trans Mountain. The Gateway is the most likely to northern BC. But
So I think there's the potential. And I think if there isn't, then I think that will start to fray some of the political alignment. And a significant potential project related to carbon capture, which is a massive expenditure, but has been seen as the quid pro quo. But again, in this current environment, we'll be talking about billions and billions of dollars. And does that align? I mean, we haven't mentioned it yet, but the standards and the mandates relative to EVs and the waiving of that in the short term, there's another signal from the government around trying to be very realistic about what can and can't happen. And so at least a 1-year lift on that, which I think does support the Canadian automakers. So there's, as I said, many, many balls in the air, and the ability to calculate and manage those and manage the regional interests is going to be a real challenge for the Prime Minister and his team.
Yeah, I get the sense that to get many of these sort of stakeholders lined up on any of these projects, Connie's going to have to come along with a very big checkbook, basically, to get everyone in line. Otherwise, these projects will end up in the courts. So it leads us into the budget, and probably going to get that tabled in October. What are you expecting as far as, the capital side? There's austerity talk as well.
So the Prime Minister was very clear when he was a candidate about differentiating from the previous Liberal government in that while there would be investments in what were considered capital projects and infrastructure, that program costs would have to be reduced. There are commitments and now proposals in and working their way through government for a 7% reduction this year, a 10% reduction next year, and a 15% reduction in the federal budget over the next 3 years. That's a very, very significant reduction in federal expenditures, and one that anybody who supports the sustainability of our government has to be supportive of. But from an investor perspective and from an economic perspective, we also have to understand how big a player the federal government is in terms of spending. So if it's going to be removing that many billions of dollars, there's been various commitments made around increasing defense spending, some comments around transfers and perhaps not touching those, but it starts to get to be a fairly large number, which will come out of workforce or out of programs, or possibly out of transfers when they get right down to it. So that will over time take some air out of the economy, of course, in the name of creating a more sustainable financing for the country. So certainly I think the right thing to do, but I think a lot of people are sitting back going, well, let's see how the politics of that works. To your earlier point, if there's big checks required to pass these things through, if we're now spending more on defense, which again, I think broadly people would say is the right direction given the geopolitical environment and our relationships around the world, then where are those cuts going to come from and how are they going to affect growth, inflation, and other key factors?
Yeah. No, I think it'll definitely will be giving on one hand, but taking with the other to some extent. Perhaps sort of moving into the US a little bit as far as sort of what's been going on over the summer. I just want to step back into the tariff world as far as court appeals for the basis for some of these tariffs have been overturned. They're now going to Supreme Court mid-October.
Yeah, I think it is important in the moment and going to be important in timing, I think, what happens with the courts, obviously. But one thing, just my own observation, is although there is a belief that Americans are not going to like tariffs because it's going to affect their pocketbooks, frankly, we really haven't seen that to the extent that was expected. And that may be because inventories were stacked up, or there may be other reasons for that. But I also don't see a lot of either Democrats or Republicans, but in particular Democrats, being very vocal against tariffs. I think there is a popular aspect about America First that is beyond just the president. And so, the fact that he may lose at the Supreme Court would be, in many ways catastrophic for his agenda immediately in terms of these deals that have been cut and what the basis of them are. But that's not to say that Congress is naturally going to be against just codifying it. This might be about process and not about the outcome. And I think it really is starting to set up a very interesting midterm election, which of course is more than a year away. But I think a lot of politicians will be smelling the wind to see which ways that goes. And particularly in some of the border states and some of the states that have tended to be very important from an electoral point of view, this idea of reindustrializing America, bringing jobs back to America. Fundamentally, I haven't heard an American politician who's against that. So while there may or may not be a short term, and I don't know what the Supreme Court will do, it will certainly create a fair bit of chaos if the tariffs are repealed or if the president is able to do it. I don't think we should assume there isn't a protectionist element that isn't going to run as a vein through the United States politically over the medium term. So I think from Canada's perspective and from an investor's perspective, you have to be looking at it and saying, this is probably the world we're in. Not to mention, even if tomorrow everything turned around and stopped, relationships, networks, supply chains have been disrupted, and these things don't all just go back.
Yeah. And perhaps, just looking at that, where Canada stands right now on tariffs, you could say across the board, there's say a 5% tariff on all goods going to the US, where we have these new baseline tariffs for Europe, Japan, and other countries of 15%. Is that a structural advantage you think Canada gets to hold on to?
It is right now, but in the medium and long term, the freeze on investment, until people understand, they're rationally assuming that CUSMA or USMCA, the various ways of saying the North American Free Trade Agreement, is going to continue as is. I don't think anybody is making that assumption today. So anybody who's making a capital investment, who's making a choice around locations, and let's face it, there are already some disadvantages from a Canadian perspective in terms of investment and the Trump tax cuts, the big beautiful bill. There's other things that have been created, incentives. There's quite I would say a generational level change in terms of trying to attract business into the United States. So there's already a lot of pressures there. But we'll see. Again, I think, in a way, there was, I guess, the option like the UK did of making a deal early and making, as it turns out, to be the best deal anybody's made with the 10% tariff. But I'm not sure that Canada and Mexico had a choice given the scale of their immigration. But clearly we're going to be on the back end of that. And we're going to have to be watching closely what's happening in the United States, not just on trade issues, but on security issues, on immigration issues, on a whole range of issues that are going to play into what's the environment that new deal will be being negotiated in.
Yeah. And perhaps from a global perspective too. We saw Putin and Xi over in China meeting recently. How is this changing the world order from a trade perspective?
If you like exciting, they say may live in exciting times. The alignments and realignments and readjustments. America no longer seen as the benevolent partner, but as a self-interested partner. And I think anybody who looked deeply into geopolitics would say that American self-interest was always evident, but now it's preeminent in terms of the sense of a president who literally, if he's mad at you, we'll slap another 25% tariff and literally mad at you, the president of Brazil. And so operating in that environment, I think, the countries that are not, there are a certain set of countries, I'll say in the West, certainly Canada, Australia, that are, despite whatever they might want to feel, are by and large aligned to a successful United States. But there are other countries who are not, right? And for those countries, this, has to be a very interesting time. I'm sure they think that there might be some clever thinking behind, is this are we missing something? But when we see, the Prime Minister of India, the head of China, Russia, North Korea, Pakistan, all standing together, talking about, we see the president of Brazil saying he dreams at night about de-dollarization. It was inconceivable a year ago that those things would be happening. Yeah. And net, I don't think they're awfully good, at least for the global order we've had so far.
Yeah, look at what the markets are telling you. You've got gold making new highs on a daily basis. Speaking of de-dollarization, you've got emerging market making all-time highs, Japan, Europe. So, to some extent, the rest of the world, you could argue, is sort of moving forward and creating new trade networks.
Yeah, they have to. And I think, and slipping back to Canada, we, in many ways, have the most exposed position. We do have a beneficial position right now because you could argue that the logic of an integrated economy in North America will make more sense if what we're seeing is a move to spheres of influence. But clearly what we're also seeing is that the U.S. plans to deal with its budget deficit through tariffs, and so there is a fiscal aspect. When I look at the president, sometimes I imagine someone who's taken over a business and is realizing it's not sustainable.
Yeah.
Right. And with a $37 trillion debt and spending between $2 and $3 trillion a year more every year, especially pandemics level spending, but no additional revenues. It isn't that complicated to see that they are pulling back significantly on expenditures and looking for different types of revenues based on some sense that what they're doing isn't sustainable. And again, back to the macro position, I think a lot of people have been saying about the United States for a long time that they, even with the reserve currency, need to look at doing things differently.
Yeah.
But of course, it's one thing to say it, it's another thing to do it, and it's another thing when it comes out of all their trading partners.
And what are those market implications? Shorter term, what we're seeing on the employment side isn't good. There's very little job creation in the US right now. At the same time, unemployment is 4.3%, so it's quite low because the labor force is actually shrinking due to some of the immigration policies.
As they say, for the first time heard on the weekend, first time in U.S. history, this year might be the first year the U.S. population actually declines as a result of these reductions in immigration, which again were in reaction to an unfettered border and issues. But that, again, momentum of itself. Now you have the new ICE budget, which is apparently bigger than the Marine Corps' budget.
Okay.
Right? So you have a huge new bureaucracy being created around dealing with that issue in the United States. Which again, when you look at countries like Canada and Mexico, this is why our situation is more complex than tariffs.
Yeah.
Right? When we have, in the news today, Russian visa holders in the U.S. asking to come to Canada because they're afraid they're going to be sent back to Russia. Right?
Yeah.
And so at the individual level, the impacts on people can be very significant, and in the macro level, that inability for labor to move, at the end of the day, is not stimulative. Having not access to labor is not going to grow the economy.
Yeah.
Now it might be good for other reasons from a U.S. government perspective, but it's not going to lead to growth.
Yeah. Before I touch on priorities for Trump, just want to switch to the Fed quickly. There have been a lot of headlines from there. Is Jay Powell going to leave early? In the spring of next year, his term is done. Some of the other governors have been in there too. At the same time, you have interest rates in the US at 4.3%. There's lots of room for the Fed to start cutting, and they're likely to do that, which could support the economy to some extent. Just your thoughts on the interaction with the Fed.
Listen, I think, again, if we in the short term in this environment with this set of players, it is just chaos. We really don't know what. Who are they going to be investigating tomorrow? But there is no question there'll be a new Fed chair.
Yeah,
and there's no question that there'll be a new Fed chair who supports cheaper money.
Yeah,
and so it isn't. If we're just looking out a year, which in the context of the bond markets isn't a long time, the trajectory is pretty clear. Now how fast we get there, and that I think is going to depend a lot on the statistics that are coming out over the next little while. As you mentioned, unemployment isn't high in the U.S., but the trajectory is
going the wrong way right
not
now.
great.
Yep.
And of course, the president is already building his excuse with the Fed chair. But I say it doesn't matter who the chair is. We know we're going to have a new chair roughly a year from now, and we know that's going to mean cheaper money. And we know that's going to be stimulative, and there's almost no circumstance in which that's not going to be the case.
Yeah.
So in some sense, we have a pretty good idea where things are headed. It's just a matter of how quick.
Yeah, and that all ties in with those midterm elections that are so crucial that Trump's focused on next November. What are his priorities coming into that? Whether there'll be more sort of stimulus potentially through emergency powers or any other sort of measures?
I mean, purely politically, and I think you see this with this government, the distraction element of always we're seeing the issues with the federalization of National Guard into certain cities. There is a sense of action and strength that I think Trump is dedicated to preserving and pushing. Clearly, the economy doing well would be what he would want. And so all of the things that will contribute to that, such as they are things that are going to be a priority. The tax cuts will have continued throughout, and so the stimulative effect of that is already self-evident. So I think, mostly it's going to be about the economy and then focusing in on some core issues where they can differentiate, essentially nationalizing the election. So to the extent that it's a series of local elections, that will tend to favor the opponent parties. To the extent it's a national election and only the Republicans have a national leader, it'll be a function of Trump's popularity.
Yeah.
And so if he is seen as a strong leader who is doing the things that need to be done, which is clearly the way they would want him to be positioned, if the issues of the day are the issues on which the Republicans tend to be strong, economy, strong, immigration, again, national defense and international tend to be issues where Republicans can do well. But if it's cost of living, which I think is everybody's concern and fear, that's hard. That's hard to play against. So,
and maybe bringing that back to Canada, then we have a prime minister who has a minority government right now. What are the key focuses from there? Is it still just about trade, or are there other measures that he has to bring home?
There were some polls this weekend that folks might have seen that showed that tariffs and trade had dropped down, I think, to number 4 on the issue set. Really above that were all a series of issues related to cost of living and economic uncertainty. Of course, those issues are related because to the extent there's trade uncertainty, it creates increases in price and cost of living and uncertainty economically. But I think dealing with those core issues are important. The Prime Minister also announced some issues related to crime and security, things like bail reform, which again are core issues that I think the diagnosis of the last election showed that some of the seats the Liberals thought they were going to win and lost were in fact in some of the suburban ridings where there was concern about home invasions and carjackings and those kinds of things. So I think the government's taking steps on those. But at the end of the day, the Prime Minister was elected to do probably 3 things. Get the best deal he could do. And that, as we said, is in abeyance, but we'll see. Prepare the country to deal with this new set of realities, right? And then everything else. And right now, the biggest part of everything else is cost of living. So I think it's going to be a challenging time, right? On the other hand, politically, with the NDP more or less non-existent and reforming themselves, the risk of opposition parties causing an election is pretty low.
Okay.
So he has a pretty good runway, probably to get his feet under him. And if there is going to be a recession or there is going to be a reset, and to the extent that there's any control over that, they probably want to have that happen sooner than later, to get that out of the way, so that you could be through that at a time when you could say, okay, now look, I've done the best job anybody could do in this difficult situation. But we're seeing in what the Prime Minister's saying and what his cabinet are saying, they are definitely creating the environment to say that we are going through a major, multi-generational, in fact, in the finance minister's words, the biggest reset in the Canadian economy since World War II. So they're saying all the things that would make you expect and prepare a population to say things could get a bit tougher.
Yeah. No, that makes a lot of sense. And perhaps with the budget coming up in October, where's that support going to come from to get that through?
Well, I think that's the job of politics, is to create the support of people to see the challenges that are in front of us. And I think that's why you're going to see both on the here's my plan and here's the problem. But if the plan, to the extent the plan is seen as dramatic and major change and therefore major dislocation, the problem needs to fit. And so if it's not a case where they can spend time saying everything's okay, but by the way, we want to upset a whole bunch of things that have made your life easier. It's like, we have some real challenges, and that's why we're doing these really challenging things. And those are going to affect some individuals. But again, their political coalition, despite having a minority, they're in a pretty strong place. And I think Carney, seems to be running a fairly centralized government with some, very competent individuals. Yes, among the elected members, but also particularly among some of the senior team he's brought together. So these are folks who, should be well equipped to do the best job they can.
Okay. And that's sort of a good place to start thinking about wrapping it up. Perhaps just what do you focus on the next couple of weeks till we meet again?
Well, I think, starting at the biggest level, the geopolitical dynamics. You could pick. The president has again said that he thinks there's going to be a solution in Ukraine. We've got the ongoing issues in Gaza, which are significant and evolving. We literally had the president of China say, standing in front of the biggest military parade in history, that this is a choice now between war and peace. That's actually pretty significant. And a myriad of both economic indicators, but also policy issues. And that's before we see the things that Donald Trump and his team are thinking of that we don't even know about. So I think it's going to continue to be a case where you want to watch the news and see what's happening, assuming no major geopolitical dislocation. I think if we get through the fall without a significant impact from an inflationary point of view on tariffs, then I think there's going to have to be an acknowledgement that the tariffs aren't really, if they are inflationary, they're one time. And I think that will start to set the tone in terms of what we expect from the Fed. Everybody's, buying in a quarter point cut, but whether that becomes a half point cut and other things to get ahead of that easier money scenario. And then, the markets will, I think at some point, it's just human nature. It will start to normalize what I described in the short term as the chaos, and say, well, this is just the way.
I think markets to some extent had this is what we're dealing with now, and you can see that.
And so I think that then will, different sectors will respond differently. Further rate cuts certainly support the small cap space, which is positive. There's literally, I think in the last short while, $25 billion worth of expenditures just from the large tech companies into the AI space. These are huge economy moving expenditures, just focusing on AI and on some of the integrative technologies that are, at some point, there's only so much money.
But we're seeing that bleed into financials, industrials, and other sectors too. If you listen to the conference call, banks are talking about AI a lot, industrial companies are talking about it a lot. So it potentially could be this one other leg to the market to some extent. It's already partly priced in, I think.
And it'll be interesting to see what, in the U.S., what the reduction in labor availability, how does that play against, a softening economy. But again, I think the statistics, and of course, and then, just because there's always got to be, and there's the other thing, we have the president's firing of the head of the Bureau of Labor Statistics because they didn't like the numbers. So I think, that is, going to add an element of interest to statistics in general and the information that comes out and how comfortable people are that they really know what's happening in the U.S. economy. So I think those lots to watch.
We already have lots to talk about for our next episode. So thanks again. And thank you for joining us for Cross Currents till next episode. Have a great day.